You're watching today's video technical update presented by FX Times. It is Tuesday, March 16th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Today we'll take a look at the dollar crosses, euro dollar, dollar yen, pound dollar after the FOMC's dovish statement. We will also take a look at the dollar Swiss franc as it has completed a rounded top, whereas the euro dollar is still developing its rounded bottom. We will also wrap up with the look at the euro pound. This video is being produced at about 3:45 p.m. Eastern Time near the end of the US session. Here's a look at the euro dollar pair right after the FOMC announcement. Now, it's not dovish per se, as you know, that would mean indication of cutting rates, but relatively to what we see in the economy, which is a recovery through the industrial sector, there wasn't any indication of raising interest rates, so relatively that could be interpreted as dovish. Now the euro dollar started today with a little rebound here. We saw that it started the week declining, but now it's rebounding and looks to continue to maybe break out and therefore finish the rounded bottom, as we see in the daily here. See, there's a rounded bottom. There's actually a trend line here that was broken and right now is being tested, and it seems like today's price action is holding this previous resistance as support. So there's it's a bullish reaction for the euro dollar after the FOMC statement. So we'll have to the market is likely to continue rallying to test this previous low here, and also the 38.2% at 138.50, 138.75, and then from there, you know, there might be some resistance, but the key thing is to see if the market can break this power line here. If the market can't break it, then the outlook may be to 1.41 50 or 1.42, the area. Okay, so that's the euro dollar pair. The dollar was also weak against the pound, as we see here a continuing rally after the FOMC statement. The market started rallying here last week, see 310, and here March 1st. So here there is a second swing. It's actually the second swing of this second leg, and it's approaching this important 1.53, 53.50 area, 61.8% retracement, which is here the nearing this previous resistance turn support, now tested as resistance. So look for some resistance there. If the market can break that, the next resistance is here at 1.5050, a little bit above that. But if there is topping action here, we just completed a not a traditional but a structure of a butterfly, and therefore there's some resistance here, some bearish forces here. Plus the proximity to our 200 moving average also suggests that there's some resistance here. So look for topping action in the next session or so, or even in the starting in the Asian European session. However, a bearish, outlook from there should be cautioned. You should caution against that simply because of the strong bullish price action. If you look for bearish outlook, it should be in the short term within the context of this consolidation until the break of this 1.4850 area. Then our outlook could be an intermediate term. Okay, so looking at the daily, you see here the possible rally towards 1.5550 from the current basing action here. The stochastic rolling up, so there is some bullish attempt underway. Here's a look at the dollar Japanese yen pair. As you can expect, there's some dollar weakness following that FOMC statement, and but already yesterday there was some signs of weakness in this pair. But we did have a rebound here that right now we can assess as a pullback because I missed the previous high here, but it was strong, so we had to use a little caution. But now the market looks like it's ready to continue declining. Looking at the daily, the different swing projections here point to the 87 area or just slightly above that. So there's some bearish signs. And now looking at the 1 hour time frame, we see some areas that could offer confirmation. But first of all, we should note that there is a bullish Gartley that just developed, and it's completed at a very important support area here. It's the rising 200 moving average and this support. But really a confirmation, if the market is able to break below 90, that would offer a confirmation. You may want to wait for a pullback. For example, if the price action breaks below, you might want to wait for a pullback, and if that pullback is weak, then that could be extra confirmation for your bearish outlook. And looking at this 4 hour time frame, the bearish outlook here has support first at the 59.50 area, which is 50% retracement, and then here 100%. But more importantly, now this 100% previous low is not as important. This market has not really respected previous lows, as you can see. Continues to break down, but our 87 area is a very important support. It's the upper boundary. Now looking at the daily, you see that it's the upper boundary of our major support area. So that's going to be where you should look for bottoming action. But for now, in the short intermediate term, it looks like this resistance area is holding up, and just some further confirmation would come from a break below 90 and possibly a pullback that is weak and tops off before going above 90. That could be extra confirmation. Here's a look at the dollar Swiss franc pair, whose rounded top is more mature than the rounded bottom of the euro dollar pair. Here in the daily, you see a break and already a pullback that was very quick and a continuation. You can see that pullback in the 4 hour time frame more clearly, and it was very weak, and today the market continues to decline. Now looking at the daily, we see that it's approaching this a lot of support right now at the 1.05 area, so that's going to be an important zone to monitor. Now if the market breaks below that, looking at the weekly, you may have a test of this previous bottom near the parity level. But if there is a bounce, you see this is a completed bearish Gartley, so there is some bearish attempt now. The question is if this is going to be strong, or if this is actually a start of a new uptrend with a little bit of resist correction now. So this area at 1.05 would give us clues. If there's a rally from there, the next resistance may be at the 61.8% retracement or 1.1680, 1.17 area. Okay, so monitor that 1.05 area carefully. A brief look at the euro pound pair as it breaks this rising trend line and is giving a reversal signal. Here the M pattern here at the stochastic also shows bearish signal. So looking at the day, well, first of all, there's a support here at 0.8970, so you might see a little bounce, and if it breaks, then it might go all the way down to 0.8840. And looking at the daily time frame, that we see the significance of this resistance here. Actually zoom out a little bit, and now we see this support here that would basically complete this rounded double top if it breaks, and therefore the target is here, 0.8850 area. So that's the euro pound in the short term. And that wraps it up for today. Visit fxtimes.com for more fundamental and technical updates as well as educational live events. Tomorrow there will not be a video update, but there will be an hour-long Charters Corner strategy session that begins at 3 p.m. Eastern Time. So make sure to visit the site and register for email invites. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.